Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over some data. And so here we are looking at AMC Entertainment, ticker symbol AMC, which closed on Friday, March 28th at a price of $2.88, being down 2.7% on the day. And it looks like it ended the after hour session flat. And so, I wanted to go over the chart over here also, really just talking about some levels that I think are really important both to the upside and downside. And also wanted to talk about covered calls and more specifically rolling covered calls, something that, I have been aware of, but I haven't really implemented until a couple weeks ago with a different stock that's Luminar Technologies. And, rolling covered calls, holding shares, I think that could be a really nice way to kind of hedge on positions. And, so that's effectively what I am going to be doing. I have picked up some calls on AMC a little while ago, but I just think that the market conditions that we have, it's really not a good time to be holding long calls. I think that it's better to be accumulating shares and then with those shares, hedging them by selling covered calls, which is going short. So maybe you guys won't like that, but I do think it's something that's, just good to be, factoring in when, one holds a large position. And so for me personally, AMC is my largest position, whether that's by a dollar amount or by share amount. And so with that being said, I do have a lot of shares that I can sell covered calls on. And that is something that I used to do a lot, but then about a year ago, I had, a little bit of, a misstep with some GameStop shares, some covered calls there. And if I would have been more familiar with rolling contracts, whether that's calls, puts, whatever contracts, whether you're going long with those, buying those contracts, or selling them as covered calls, I think that could be a nice way to kind of play the market. So I'll go over that and kind of my strategy with AMC. But first, I'm going to dive into the charts. Then, I'll just mention Max Payne right now. And so here, this is just Max Payne from Unusual Whales. And we can see the Max Payne data here, just the numbers for the upcoming weeks. And just to note that Max Payne for AMC is right around $3 a share, really getting into September. And then if we do, scroll down here, we can see that it actually gets up into the fours, but that would be next year or the following year. So do I think that AMC is going to be around $3 a share for years? No, not necessarily, but I do think that Max Payne is something useful to be considering when looking at the stock chart. So I'll get into that and how I plan on using that for selling covered calls and then rolling them, which is, of course, very risky. Options are risky, but I did, like I said, want to dive into the chart first. And right here, I do have this. I don't know if you can see it there. It says this is on the weekly time frame. I wanted to dive into this before getting into the daily, before getting into my lines in the sand. And so here, looking at this, what we can see is last week, we don't have a very good look. We have a bearish engulfing candle here where we opened at a price of $3.06, so above $3 a share, so that's great. But then we closed well below it at 288, and that did engulf the open and close from the prior week. So that is not such a great look. And so that could be suggesting that we're going to see some more downside. But there is a little bit of hope with this in that we do have this low from the week that ended on March 14th, and that low is at $2.82.2. So we haven't hit $2.82. We were just above it. And so with that being said, we have put in higher lows so far. And so I am hoping that we maintain higher lows. But if we don't, I think that AMC could be dropping a lot further down. And there's actually, some poetry in, that level based on the current to the penny low that we are at here, which is $2.83. And so, with all that being said, I'm probably going to say that a lot in this video just because I'm not going to be editing it. But I'm just going to switch this over to the daily. So we have that here. Actually, maybe there's a little bit of hope here that this is potentially a spinning top, or, a little bit of a doji with the big wick to the upside downside. And, if you squint, it looks like we opened and closed right around the same price. But really, the bigger wick is to the upside. So that suggests that there's more selling up there, more selling around $3 a share. And yeah, I mean, excuse me, the high for the week was $2.96. So not even getting up to $3 a share. And then the wick to the downside is smaller. So that doesn't really suggest that there's a lot of buyers down there pushing the stock price up, getting a bounce or a bigger wick there. We see that to the upside. So sellers up here pushing it down. So that's not such a great look. We are still in this downtrending pattern here, just putting in lower lows. So we need to see a break of that. And hopefully we see it this upcoming week, but we may not. And so now I am just going to throw out my drawings. Might be a little bit overwhelming, but I tried to kind of simplify things here. And so as I have talked about in previous videos, just zooming out, want to show where the blue line comes from. That is this gap that was based on the close from May 10th of last year. That was at a price of $2.91. We did gap up, and the line there is solid because we have filled that gap when we hit that low of $2.82.2. And so generally, I don't think this is a good look. I think that we are likely going lower, but there is, really that line in the sand at $2.82, or, what I should really put on here as $2.83, because, rounding to the nearest penny, what an order would have been filled at, $2.83 is the low. So what I want to see in this upcoming week is that if we do hit 283, we don't go lower than that, and we continue to put in and continue to hold higher lows. I think that would be a not so bad of a look, but I don't necessarily think it'd be a good look. And if we do start to go lower than 283, if we do hit 282 to the penny, I think that we could be going a lot lower. And so what I had kind of doodled here is that, we get a flush of this gap when we fill that, and then we really, start to go higher. We unfortunately didn't see that. We got a rejection over here on March 26th when we hit a high of $3.18. And so, I don't think that's such a good look, and I think that this is probably going lower. Unfortunately, I don't really think that this doodle that I have up here is really that valid. So just for, cleaning the chart up a little bit, I'm just going to delete it. And so what I feel like is going to happen if we do cross below 283 into the 282s and lower, then I think that we might be testing. If I just adjust the axis to be automatic, I think that we might be testing, this all-time low here of 238. And so that was the low that we hit on April 16th of last year. That date's coming up. And, a little bit of poetry that I was talking about, this thick green line is at 238. This light green line, or thinner green line that I have here, is at 283. So just switch in that 3 and that 8. So I find that to be kind of poetic, kind of nice. But, ultimately, I want 283 to be held. But if it's not, then, I'm just going to kind of sit on the sidelines and wait for the possibility of hitting 238 or bottoming signals around that level. Like I said, this is my largest position. So if I am to be managing my portfolio responsibly, I shouldn't just be throwing more money into AMC, because then my portfolio is just going to be imbalanced, and I should really just be focusing on other positions or just keeping cash on the sides. And that would be, for on the sides, if, AMC does come down to 238 or right around there, I'd be ready for it. If it comes down to 283, that's not much lower than current price. And, for me, I don't really want to be adding at that level because I do think if we do hit 283, it will be going lower. Because if that order's filled, it's probably hitting 282, and then that's a lower low. But for me, rather than having an alert there, I'm just going to pick up one share. I have been selling some covered calls, so I have made enough money to justify spending $2.83. With the hope that that is a defense of that level. But I don't think it will be. If we hit 283, I think that's the same as 282, putting in lower lows and then coming down to here. So, just being honest about that, that's what I'm thinking. And so rather than having an alert there at 283, which I had previously, I do have an alert here at $3 a share. And that's largely because of the max pains. And so I will go over that stuff, but I'll probably just finish going over the chart because I feel like you all are probably more interested in that than my kind of thesis around max pains, which, I will get into. It's based on some of the levels that we've seen here. But so, just talking about these levels that I have drawn up here. This line, I believe it was red before, but I changed it to purple and dashed. That's $3.68. And so that is effectively, the share price that AMC Entertainment diluted at to raise some capital. And so, you can think about it however you want. I don't care. You do you. But the way that I think about it is I don't think that AMC is worth $3.68 per share. I think it's worth at least, around $10 a share, at least. That's my thesis. That's where I would want to be selling at if I were to be selling at $10 or higher. I don't think we should be selling at $5. I don't think we should be selling at $3.68. But given the fundamentals of this company and that we're burning cash, we're in massive amounts of debt, our CEO and, the board, whatever, who are paid salary, just putting that on the table, whereas GameStop, they're not paid in salary, they're not paid in options, they're just there to benefit from the company's success. AMC, not the case. They get paid a salary. I'm not paid to hold shares. So anyways, I don't need to rant about that. But 368, I don't really like it. I got that level marked up here because this is when we announced that dilution when we were above $5 a share, and I think that was just a huge rug pull to us. And so I personally am not happy about that. I've lost a lot of conviction in the stock because of that. And that's just me. That's, me being honest with you. But I did draw this doodle up here thinking that, maybe we could break out, pull back to retest this yellow downtrend, and then start to go higher. And, the reality is that has not played out. I was wrong about that. Maybe it does in some sense, but I'm really just going to delete that doodle to clean up the chart. And I think that this yellow downtrend is going to be an important one for us to be getting above. And let's see, before I forget, I did just want to throw up the moving averages because I believe the 50-day, it does coincide pretty nicely with that yellow downtrend. We have the 50-day moving average at $3 and basically 20 cents at 19.9 cents. We have the 21-day moving average at, let's see, $3.01.4. So being right around $3 a share where this alert is. So I think that makes a lot of sense. And then we do step back. We do have the 200-day moving average at $4.28.5. I don't have any levels marked up there, but maybe I will in a minute. There is one trend line I did want to add. But anyways, those are the levels for the moving averages. I don't want to have the chart cluttered, so I'm just going to hide those. But that does, make me think that $3 is an important level, not only because of the 21-day moving average here, but also because of max pains, also $3 being a whole dollar number. It's a psychological level. I think that's important. And then I also think this yellow downtrend is important, not only because I have it drawn up there, but because there is the 50-day moving average up there. And then, 420, that's a fun number that's right around, the 200-day moving average. But anyways, I'm just going to remove those so we don't have the clutter. And I do want to note this because it will come up and be relevant for the max pain discussion, selling covered calls, and then rolling those. And so that is at this high of $3.18. I'm just going to leave that there in white. So we will want to revisit that. But, I really just wanted to take a step back to look at this yellow downtrend. I did adjust the colors a little bit because I kind of want to think about it as, levels of caution, green being potentially, dip buying levels, and then yellow, and then orange, and then to red being kind of cautious levels. Maybe those are levels of resistance or levels to trim at. You do you. I'm not planning on trimming here, but with selling some covered calls, maybe I'll be forced into trimming some. But I would like to be rolling those rather than selling at those levels, settling for them. So I will discuss that in a little bit. But let's see. Where was I going with this? These levels, I don't really want to be selling down here. I don't want to be selling at 5 or at this orange uptrend. I'd rather be selling or trimming, I should say, around 10. I think that's reasonable. And my share average, full disclosure, is below 10, but I think it's right around 10. And so looking at these trend lines, I'm actually going to take a step back so we don't have the big move from May. We can just see these a little bit cleaner. These are the same levels that I've talked about in other videos. I haven't adjusted them. And actually, I guess maybe they adjusted themselves. So, I do need to do that. I don't know how this happened. I think going back and forth from the different time frames, I got some adjustments there. And so, this, let's see, get that one adjusted. This is annoying because I had these, locked in place at those days, but then it probably adjusted to the Friday or something, so the weeklies. But anyways, okay, so got these trend lines here, and then I'm just going to get the current price action into frame as well. Excuse me for these adjustments, but I just want to have this, dang it, I'm trying to get the right side lined up. Okay, so there we go. We've got, these trend lines. And so, looking at this yellow downtrend, I've talked about this many times on the channel. Dang it, I need to adjust this once more over here, going from that high. Okay, and so, I'm going to lock that into place. And so the pivot points, based on the high from June 6th, had that date memorized. And this one, I forget, I think it's September 6th. Nope, that's August 1st before markets gap down here. And so that trend line did act as resistance over here. So, thinking about that as a cautious level, that, whether you like it or not, that would have been a good level to trim at, to sell at, to take profits at, because then you could be buying back those shares where we're currently at. So, whatever you think about it, if you want to diamond hand it, that's fine. But just thinking about this downtrend, that from this historical, chart here, that would have been a good level to trim at. And so we did, though, break above it, and then we bumped into this orange uptrend, which is based on the low from May 31st, and then the low from August 5th when markets gap down. I'll always remember that day. And so that uptrend acted as support here. And so that would have been a good level whenever tested, or around that level, around 440. That would have been a good level to buy at and then trim up here until we broke down. And then that orange level then became resistance, and the yellow level became support. So we kind of switched them there. But then coming back over to here where we're currently at, we're below both of those levels. So that, they're now going to be resistance to the upside. And so that's something that we need to be considering. But with this gap being filled here at 291, we do see this thick dashed blue line up here at 685. And so that is based on the closing price from May 14th. We gapped down the following day, closed lower. We did go higher, but we did not fill that gap. So 685, that's a gap that has not yet been filled. But there really wasn't that price action around there, so I don't think that's necessarily going to be like a level of resistance. And so I don't really think that's like a level to be considering trimming at or anything like that. $5 Historically, following this big move, yeah, that has been kind of a level that would have been good to trim at. Unfortunately, because we were selling, as a company, diluting shares at 368. So, that's 50 million shares, capital raised at $3.68, average share price there. So, that is just what it is. But, looking at the charts here, there wasn't much going on over here. Just a big open up at 1188 and then a close lower at 685. But we do notice some other levels to the upside. I did add this gap up here at 1009. And so that was the closing price on November 8th. Before we did gap down here. I don't know how well you can see that, but there is a little bit of a gap that, it was filled actually. I stand corrected. I should probably mark this as being a filled gap there, and maybe I'm going to leave it thick, but yeah, we did fill that gap at 1009. But, just a few days prior to forming that gap, we hit a high of $11.06, on January, I'm getting my numbers all confused, on November 6th, not $11.06, not January the 6th, at November 6th, we hit a high, and that's November 6th of 2023. We hit a high of $11.43. And so a year ago, I had that level marked. And looking at the chart here, that would have been an excellent, I'm sorry, however you feel, putting emotions aside because we don't want them in the market, $11.43 would have been an excellent level to sell, to GTFO at. In all honesty, whether you're in the green or in the red, at that price, that would have been a good price to sell all shares, I'm sorry, and then buy back down here. Just looking at this, in retrospect, that's just what it is. And so kind of my view, my thesis, given that we had sold shares at 368 and we, struggled to hold above $5, I think that $10 and above is, good levels to be trimming at, if not completely exiting, because it's just been so much time in the stock. And so that's kind of my view. I have drawn other levels to the upside, but I made them thinner and I just made them all red. I think that they're levels to trim, GTFO, whatever you want to think about it. And so those levels, they're based on these gaps here. And so the gap window, as far as I understand what that term means, is, the beginning of that gap. And then to fill that gap is the blue dash line. So the gap windows are marked, or, like the window sill, you could think of it as marked by the red lines. And then the gap fill would be marked by the blue dash lines. And so those prices are $16.60 for the window sill, $19.60 for that gap fill, and then the window sill up here, at $36.97, and then filling that gap up here, $46.41. And so in all honesty, brutal honesty, in the year of 2025, I don't think that we're going to hit any of these levels up here, $16.60 and above. Maybe I'm wrong, or maybe if we do, it's just going to be like a day type of thing where maybe we open above. And so, if there's a day where we open above any of those levels, I think that's probably a good time to at least trim some, because, what happened before over here is, that would have been a good time to just completely exit, to then either buy back or just look at other charts. And so, yeah, if something crazy's going on and, we're gapping up above these levels, I think those are ones to trim at. But, I don't think that we're getting to them. And so I think that's something to consider. But then looking at this bigger time frame, there is a trend line that I did want to add. I was just looking at the chart this morning, thought, hey, I'll try this out, see if this has any significance. And so this is based on, the high from August 24th of 2023, which happens to correspond with a reverse split time frame. Let's see, actually, before I do any doodles, this was, reverse split 1 for 10, August 24th. And so the not gap up level, but, just the top that we hit there. So that high on that day on August 24th was $16.60, so marked here by that red line. And so connecting that with the pivot high from May 14th of 2024, which was at, I believe, $11.88 during market hours high. And so if I just connect, those two pivot points, we get this downtrending line. And so I just kind of wanted to see, that relative to where current price is. And so that intersects with some of these levels that I've drawn over here that, are forward looking with the chart. And so while that does intersect with this gap that has not been filled yet at 685, that is, going to be going back in time to get that intersection. So moving forward in time, the intersection that we see is with this orange uptrend, and that would be intersecting based on, April 25th. And so that is going to be around $5.70 or $5.69. You got to have fun with the numbers. Otherwise, this is just boring and sad. Or maybe it's still sad given that I'm talking about 69, but you got to have fun. You got to have fun, okay? And so there's that intersection there. And so I just find that interesting that this, level of resistance, so perhaps I should make that a thick red line. In all honesty, that is going to be moving forward at 570 or lower. And so I do have this alert here at $5 a share. I think that $5 is going to be notable resistance. Do I think that's a good level to sell at or trim at? Personally, no. My average is above $5 a share, and I don't think that's a good level to sell at. But do I think it will be resistance? Yeah, I think that we're probably going to see some resistance like we saw over here, whether that's because we raised some capital by dilution or some news comes out that's not so great, or maybe, whether it's politically related or, just based on the government, the Fed, whatever. I don't know, maybe there's some news that comes out that's bearish there and we get rejected at 5. So I think that if we do go up to 5, we'll probably get rejected there. But then I would hope that we start to form higher lows, and then that's not such a bad look. It's just going to take more time. And so anyways, I find that to be interesting. I find that to be compelling. But, for me, this is, the area that I'm looking for. Because, this is the largest position in my portfolio. And so, do I want to completely exit my position at 10 or at 12, 11.43, whatever it is? No, not necessarily. But in managing my portfolio and being a responsible trader, I should probably adjust my position size to be more similar to my other position sizes. And so for me, that's what I would probably do. But I would also want to be holding more in case we get some gap ups to any of these levels, which would then be followed by, in my view, a massive pullback like we saw here on May 14th. And so that's kind of my thesis with the chart, the levels to the upside. And so now, I really just want to talk about covered calls, which are very risky. But then selling those related to max pain. And if I get into a sticky situation with closing above max pain on a Friday, closing above the strike, then, I would want to roll those covered calls. So I'll just talk about those a little bit and, really just thinking about $3 a share, because that is max pain coming up for April 4th. And just to consider this, for max pain for this previous week that ended, yesterday, as I record this on the 29th, yesterday on the 28th, max pain was $3 a share. And we closed below $3 a share. So if I would have sold covered calls that expired yesterday, which I believe I sold one, they would have expired worthless, which means I would have been able to keep that premium and get my shares back. And so that's a nice way to make a little bit of money. And so I did that. I think I made like $6. So it was nothing too crazy. But, with the upcoming week, max pain is $3 a share. And I believe I've sold one covered call for the strike of $3. And I'm just going to pull it up on my phone. I don't want to have it up on the screen, but I'm just going to, let's see, I believe, let's see, how am I going to do this? Sorry, just one second. For upcoming April 4th, I have, let's see, I thought I had, I do have a position in it. I'm not sure what I sold at, but it doesn't really matter. I think actually, I think 6 cents, so I made $6 on it. I'm not sure, but if AMC does close above $3 a share this coming Friday, then I would have to sell 100 shares at $3 a share. My covered call would be assigned, and I would be forced out at $3 a share. And so I don't want to sell shares at $3 a share. And so if we do close next Friday above $3, which I suspect we will, I would then want to roll that contract into the following week or, weeks into the future. And then I could then, through that rolling, collect more premium, but then I would just be postponing when I would need to sell those shares if we close above whatever the strike is. And so looking here, basically I have 2 more sells for covered calls for the max pain, based on the strike of max pain at $3. And so I'll just pull up the options table here so we can look at that. I'm not going to zoom in. I'm sorry, it's probably hard to see, but I just don't have time to edit this, and I wanted to kind of do videos like this for a lot of stocks this weekend. And so what we can see for, April 4th, these are calls. We have this bid premium here, and that is for selling. So that would be to sell a covered call. Like I said, I think I sold one for 6 cents, and so I made $6 there. And so that's effectively like, if we were to close next Friday above $3 a share, I'd have to sell those 100 shares at $3, but then I get to keep that premium, which for me was 6 cents, but right now it looks like the sell is at 5 cents. So that would be effectively selling 100 shares at $3.05 based on this. For me, for my position, that'd be $3.06. But then I think that AMC is probably going to see a little bit of a bounce. So just coming back to the chart here, I'm hoping that we put in higher lows. And I think that, with all the panic in the markets, I think that with whatever news comes out on April 2nd, I think the markets will rally around that, and I think AMC will bounce, and I think AMC will bounce and to close the week above $3 a share. So in selling covered calls with a strike of $3 a share, I think that's really risky. And so I need to be prepared for the possibility of selling those shares, those 100 shares at $3. I'm prepared to do that. And I'm prepared to do that by being comfortable with rolling contracts into the following week. And so I'll talk about that in a second. But I just wanted to come back to this options table here. And so looking at this, $3. So I have 2 more limit sells. I want to look at the chart here for that. 2 more limit sells for the $3 strike for this upcoming Friday. One is at 10 cents. So that would effectively be like selling shares at $3.10, 100 shares at $3.10, if that contract ended up getting assigned, which I don't want. I want to roll. I don't want to get assigned. And then I have another limit sell at 18 cents. And looking at the chart here, you can probably guess why I have it at 18 cents. And that's because it was the high here. On Wednesday, the 26th, we hit a high of 318. And so I view that as kind of a top. It was resistance here. It might be resistance again. Also, we do have, where the cursor is, kind of some consolidation. We see some tops of candles. We see some wicks there. that's at $3.10. And so that was resistance as well. So that's why I have a limit sell at 310 for 10 for one contract and a limit sell at 18 cents. So then I'd collect 10 cents in premium, which is 100 shares. So that's $10. And then I'd also collect premium, $18 up here if we do get a bounce. But if we close the week above $3 a share, I will get a sign. I don't want to sell at $3. So what would I do? So let's look at the options table and just put this into perspective, okay? So the bid price to sell is at 5 cents here for that $3 strike. And so to roll would basically be extending that contract date. And one of the things that I have to say that I've gotten more familiar with, based on this Luminar trade from a couple weeks ago, is what you're doing is you're effectively buying back this contract, which would be buying back at 6 cents. So higher than the sell here, higher than the bid here. The ask up here, we see it says ask is at 6 cents. So I would then be buying these back at 6 cents. And then I'd be selling a covered call at a later date. So that's rolling it, buying this contract back, and then selling it at a later expiration. And so you can do that manually, but your brokerage account should have the option to roll. And so for me, I can't do that by looking at the options table. I have to do that by looking at my specific positions. And then I go to sell. This is in Webull. And then there should be an option under the sell to roll. And so I did that with Luminar a couple weeks ago because it was closing above max pain, or it was closing above my strike, which was above max pain. And I didn't want to sell at that strike. So I rolled it to the following week, collected more premium. And now Luminar's trading lower than that price. I made some money on that. So I think that's kind of, the good way to be trading this. But of course, this is all risky. And so I'm just explaining what I'm doing. If you're curious, and I'm not suggesting this is a good idea, maybe it is if you're comfortable with it, but I'm getting comfortable with this. So I don't recommend, none of this is financial advice. I don't encourage doing anything that I'm doing. But if I do look at the $3 strike for the following week, so April 11th, just for a comparison, I'll scroll up here so we can see it better. We can see that the sell for the $3 here for April 4th is 5 cents, whereas the sell for the expiration of April 11th is 9 cents. So rolling would effectively be, I'm going to buy back this $3 contract with the April 4th expiration date. I'm going to buy that back for 6 cents, and then I'm going to roll it into the following week by selling that contract and collecting a premium of 9 cents. Times 100 is $9. So I'd be buying this contract back for $6 and then selling it and collecting that premium of $9. So I'd be making a net $3 profit there. So that's not a lot of money, but it's something. And so I would only want to be doing that if we are closing above max pain. And so as time moves on, these bid and ask prices will change. The premium of them will change. But if we're closing above 3 next week, this bid, if we're closing right at 3, it will effectively be 0 because it's $3 plus or minus the bid and the ask. And if it's exactly at 3, the bid and the ask should be 0 because these contracts are worth, what the strike is, $3, if the share price is $3. But if they're higher than that, this premium would be higher, so you can collect that premium. But then extending into the future, that premium would be even higher because then there's potential for, it to be in the money or more in the money. Just like looking over here, like the $1, maybe this is a bad example because they're the exact same. Yeah, actually, that's kind of crazy that they're, these are the exact same. So, maybe that would be, then posing some risk because let's see the $1 strike here for, April 4th, not suggesting this is a good one, but, actually, $1, that's pretty extreme. So let's look at the $2.50 one. That's probably a better comparison. So $2.50, we are currently in the money at a price of $2.88. And so, like, let's say I were to hold one of these or to have sold one of these contracts at 36 cents, but then, hey, crap, April 4th is upon us. We're closing above 250, let's say hypothetically at 288. I don't want to be getting assigned and having to sell my shares at $2.50. So what I'm going to do is I'm going to buy back this contract at 40 cents, which is going to cost me $40. But by rolling it, I would then collect the premium for the following week, which is 39 cents. So I'd be losing $1 on that, but I'd be keeping my shares. So to me, that's a worthwhile trade. But it is, getting risky, as you can see, with, closing in the monies and whatnot, stuff like that. So anyways, with max pain for upcoming Friday being $3, as we can see here, I plan on selling more covered calls to collect some premium. And those, the premium that I'm collecting will be based on these levels. 10 cents for $3.10, 18 cents for $3.18. And if those orders do get filled, then I would probably sell more covered calls. But I might look to different strikes, maybe 350 or, whatnot, and just kind of evaluate what's going on with the stock price. And also, I have to say that me talking about covered calls quite possibly could be a bottom indicator, and that stock's going to squeeze. I have no idea. So, this stuff is all very risky. But, one thing that is a little bit reassuring for me is that the max pain for the following week, April 14th, is 250. So that's lower than this max pain. So that makes me think that we're probably not going to be, if we do go up to $3 and close next week above $3 on the 4th, that makes me feel like I could probably roll those covered calls fairly easily to the following week with max pain being 250. So I think that, that's kind of a safe bet. But then for April 11th with max pain being 250, I think those would be kind of tough to roll, because the following week, April 17th, for the monthly contracts, it's 350. And so if price is getting up to 350 and I have covered calls with a strike of 3, it might be tougher for me to roll those and take some profits, collect that premium. So I might actually have to lose some money to maintain holding those shares. But also, I have such a large position in AMC. If I do sell a few hundred shares at a strike of $3, it's not the end of the world, And that would be a good thing ultimately, because price would be going higher and I'd be celebrating that. And so that to me is kind of a nice way to hedge, a nice way to manage risk. And, using the word hedge may not resonate that well with you because of hedge funds shorting AMC and covered calls effectively be going short a company. It's just a way to hedge. It's just a way to manage risk. And so I find this to be a compelling strategy for me. It is something that's fairly new to me that I'm learning, rolling these contracts last minute on a Friday. It's exciting. And if I do get assigned, like I said, it's not the end of the world. I'd have some cash on the side, and then I'd be lowering my risk. And so that seems fine to me. And so, what I see with AMC based on that analysis, I think that AMC is going to be bouncing next week. And so I could see it, we got the close here. I could see it doing something like this, going above $3, making me sweat some with those covered calls. But then I think that price will roll over. Man, that doodle gave up on me. I don't know what was going on there. What I wanted to say was that this would come down and maybe to get to that previously filled gap level and then bounce there and then maybe we would see a breakout from that yellow downtrend. Man, those arrows, they never look good. But so that's, and actually maybe with that not looking good and me thinking this is kind of my short-term thesis based on those max pains. It makes a lot of sense to me. So I'm just going to draw that a little bit faster. So, I think that we're going to go up here, get rejected, pull back, and then bounce, and then we would get that breakout. And that's a nicer looking arrow, so I feel better about that. And if we do bounce into next week or during next week, and we don't hit $2.83 or $2.82, then, we're putting in higher lows. And this would be setting up for a potential breakout of that downtrend, that yellow downtrend that I talked about, that goes back, since, almost a year ago to those highs of June 6th. And so, yeah, that's a small move, but I think that's us taking steps in the right direction. And so I feel good about that. And I would be willing to risk having to sell a few hundred shares at $3 a share. I would be willing to sweat up here. And then at that time, to be honest, I'd probably be more aggressively selling some covered calls because I think we're going to bump into resistance and pull back. And so that would be the time to be bearish before pulling back a technical level. And then if I'm making money on premium selling these covered calls, then I'd feel more comfortable to buy more shares than just one, just for being engaged, just for that little bit of hope. But to me, to be honest, if we hit 283, I effectively think it's a waste of money to be buying shares there because if we hit 282, I think that we could be going down to 238. And that would be the time to be throwing money at it. Right here, it's all just kind of speculative, a little too speculative, a little too much hopium. And so, yeah, and with hopium, I'm just going to go over the call contracts that I do hold. So I got kind of a list of options theses. I did used to go over these on a weekly basis. So 2 calls that I do hold, which I'm sweating a little bit on. I think I'm going to lose money on them, but that's fine. In this market, I don't think it's a good time to be buying calls. I think it's a good time to be selling them and buying shares. Because buying shares, you can go long term. There's no expiration date. With call contracts or put contracts, buying them, there's expiration dates and they can go to zero. And that's the reality. Stocks can also go to zero, but it's much less likely to. But then, with these expiration dates for contracts, that kind of helps me to get out of positions because especially in stocks like AMC, where there's a big community around them, it gets tough to sell, it gets tough to trim. Contracts kind of, force you to do it. And so anyways, these 2 contracts, I've talked about them before. One is the $8 call that expires in June, 83 days to expiration. So for me personally, I like to have multiple months between now and expiration. So I'm starting to sweat a little bit. I'm starting to, really I like to have at least, 100 days to expiration. And so I'm getting a little bit nervous with this. And, I guess I'll share because I imagine not many people are still watching this. If you're still watching this video as I'm talking about this, let me know in the comments because I just imagine people are not still watching. And actually, I can pull this up on the screen for you guys to see. And so this is actually, I'm going to have to open up my watch lists. And you guys won't be able to see my positions, but you can see kind of some contracts that I hold, which I'm going to try to go over all of this stuff over the week. But here, so the AMC $8 June 20th expiration call. And so for me, I have, let's see, it's going to be embarrassing. I have 20 of these contracts. And my position is 20 cents. So I'm down 50% on this, and it could be going to zero. And so let's see. I'm just going to bring up the calculator because I suck at mental math. And also mental math on camera makes me, sweat a little bit. So I got, 20 of these contracts. And I know it's 140 bucks, or $400. Yeah, see, mental math sucks. So yeah, 2 times 2 is 4, with 2 zeros, 400 there. So I'm risking $400 on this, and I'm fully prepared for this to go to zero. And I just think that what we're seeing in the markets, it's probably a bad idea to be buying calls, and because I think that this could be going to zero. And $400, I can live with that. It's not the end of the world. But I think it's just better to be going into shares. And actually, thinking about selling covered calls, and this having looked like, it's kind of flattened, around 7 being the low there, but really, the lows being like 8 cents. Maybe it is a time to consider getting my average down. Yeah, but then it's just a slippery slope. And so I have a limit sell for this, full disclosure, all 20 of those contracts at 24 cents. That's a 20% profit. That's kind of, what I went over in my options theses. I think that they're a nice way to make at least 20% profit. And so I'd like to do that. I'd like to hold. And, and if AMC squeezes and this goes to the moon, I could have made a ton of money on these. But, I'm still new to trading so aggressively options. And so, if I make 20%, which if we do some more mental math over here, 400 times 1.2 to get that 20%, that would be turning $400 into $80, $480. I'd be making $80 profit. So that's not nothing. And so that's exercising some discipline. But yeah, I'm kind of looking at this and I'm thinking maybe there's going to be a big move. And if I do, sell, let's see, just to do the math up here, if I sell 19 of those for $24 at 24-cent premium, I'd be making $56 in profit. So maybe I'm just going to adjust this. You'll probably hear a little beep. I'm just going to adjust my position to only sell 19 of those 20 at 24 cents. And so I'd have one contract that would be the moon bag. And then thinking about that with my average being 20, maybe I want to sell one for a 100% gain, and that would be at 40 cents. And so that would be like my moon bag. And so I've placed that order. You don't hear a beep because I didn't change an order. I just placed an order. And yeah, so that's, I guess, kind of my thesis with this one. But I think it's risky at this point to be putting more money into it. For me, I'm okay with risking $400. But if I start selling some covered calls, maybe if I make $8 in profit on those, maybe I could get, another contract here, risk another $8. But yeah, generally, I think that's just risky, and I don't think I should be doing that. And so the other contract, I guess I'll just open it up in unusual whales, is the $20 contract that expires in January. So got, nearly a year to expiration, 293 days to expiration. And I feel comfortable with that, but the strike's 20. And, I had talked about, the stock price maybe not even getting beyond 10. So this is risky in that sense, but there's plenty of time, so that lowers that risk. And so let's just pull up the chart here for the $20 call that expires in January of next year. And so currently at 14 cents. And let's see what my average is for this one. So I have 6 contracts, and my average for those 6 is 36 cents. And it looks like I have a limit sell of those 6 at 43 cents. Now let's just pull up that calculator. And so 36 cents or $36 times 1.2 is going to be 43. So that's why I have that. But let's just see here. Let's clear this out. Let's see what 43. Wait. So I got to do this. Let's do this appropriately. So $36 per contract is my average. And let's see what what I risk is 6. Okay, so $216. I need to make back $216. Okay, so let's keep that in our heads, 216. And so now let's see 43, which would be that 20% times 5. Dang it. But to be honest, I don't necessarily think AMC is going up to $20 a share. So I'm just going to leave that for a 20% profit. I think that's fine, selling those. But, considering this and considering, that, it's 216, is that what I said? 36, my average, times 6 of those contracts, I'm risking $216. Am I willing to risk losing $216? If this expires below $20 on January 16th of next year. Yeah, I'm okay with losing $216. So that's fine for me. I'm not going to add to this. I'm just going to chill, okay? And I'll settle for a 20% profit. That's fine. But something to consider, I'm not encouraging this. I'm not suggesting it. But given what I have said, and that price for this one is 14 cents. Let's just take some measurements here. From current 14 up to my average, of 36. That's a 160% swing. So if one does not have this position, maybe that's compelling. Knowing full well that I am willing to risk losing $216. Or maybe it goes up to that 20% level, which 43 cents, that's over 200%. Tough to see because that little thing's there, but it says 203.48% there. And so maybe that's something to consider. I'm willing to risk $216 on this, not going to add to it. I'm just going to chill, not going to worry about this at all. But yeah, maybe there's something there. I don't know. And then this other contract that I was talking about. So I'm just going to pull this back up on my phone so I can look at it. With my average being at 20 cents from 10 cents from current price, I'm willing to risk $400 on this, going up to 20 cents, which doesn't really look that crazy, with the chart here. That's a 100% swing. That's a 2x. So I don't know. Going to my 20% profit level, that is going to be at 24 cents. That's 137% from where it's currently at. I don't know, something to think about. I don't know. And then if it were to go to my moonbag level, which would be a 2x for me, that's getting up to 40 cents. And that's about a 300% move to the upside. Do I think that's going to happen? No, because I'm fully prepared to lose $400. But, my average isn't 10 cents. It's 20 cents. So, even just to get to my average, that's a 100% move. So I find that to be interesting. And then, I will just expand this so we can kind of look at that premium for AMC. It's taking a second to load. I'm not sure why this is taken so long to load. My internet connection is fine. Maybe it's an issue with unusual whales. So I might not expand this, but what we can do, site can't be reached. There we go. I don't know what happened there. But so this is the net call and put premium as well as the stock price in yellow, and the contract volume there in red down there suggests that there was selling. We see by the bear bull slider that majority was on the bullish side. And we can see that net put premium in red went up, but then kind of came back to zero. Ended the day with a net put premium increase of $1.64 thousand. So that's basically flat. So that's kind of neutral. That's not too bad. Or it's not bearish or bullish. It's kind of fine. And also, too, this suggests to me, because this volume is red and the premium up here is going, that makes me think people are selling cash secured puts, that they're thinking that the bottom could be in. Also, what we see, that's potentially bullish. So selling cash secured puts, that's bullish. That's suggesting that the bottom could be in. Maybe they're selling some $3 cash secured puts. Price is going to go up. And so, yeah, so that's bullish. And then we also see that the net call premium in green went up, and that increased by 58.99 thousand. So that's really not that much of an increase. That's not really that bullish. And yeah, and these net put premiums, this is, spikes from net put premium of 28.56 thousand up to 48. So this is really, not that. This is it's like 20,000. So it's like 2 degens if one degen is $10,000. So these spikes aren't really that big, but given that we see this, volume being negative, that makes me think that people are selling, cash secured puts. And so maybe we actually, want to look over at data from unusual whales. Let's look at the flow. And so just going to go to the flow feed. I am going to filter this by AMC. And I am just going to restrict the day to the 28th because that's what we were just looking at. And I am going to adjust the minimum premium to be, let's see, I'll make it $5,000. And so, there's not many contracts here, but there are some. And so what we saw looking over here, spike around, let's see, this is around 1:20 p.m. So let's look over here around 1:20 p.m. right here. This is a call. So I wanted to see a put. And so maybe 5,000 is too high. So make that 1,000. Let's look at 120. I need to, how many, let's see, results. Let's do 250. So we see more on here. And let's scroll down to 120. So we got some alerts here. This trade was part of a flow alert. Click for full contacts. And these were asks. So this would suggest that it's bearish. This is a $2.50 put with a $4, with a April 25th expiration. So that's bearish. But this also, there's also, this multi-leg strategy here. That's what this arrow means, multi-leg option strategies. $3, $4 puts, and those suggest, that they're bullish. And that would be that, somebody's, potentially, selling cash secured puts, that they'd be willing to buy shares below $4 or below, $3. But yeah, this video is more than an hour long. I don't necessarily want to dive into all of this because, as you can see, there are a lot of weeds to be sifting through. And if I do look at the data here, the spikes are, 20,000, really not that much. And it did end the day, being effectively flat. So I don't think there's really too much to be going on there. But with this negative volume, that does make me think cash secured puts are being sold, that people are potentially willing to, buy shares, whether it's below $4, below $3, or below $2.50, whatever it is. I don't really know. If we do take a step back just to look at the past 30 days, over here from, Friday, it's insignificant relative to what we see, the price spikes in net call or put premium, or the dips in net call or put premium. So, I don't think that anything too exceptional is going to be going on in the coming couple of weeks. But if I do come back to AMC to look at the chart here, this is effectively what I see happening in the coming weeks. A move to above $3 to make people who are selling covered calls like myself sweat. For people like me to try to keep my cool when we're above $3 a share, to sell some more cash secured puts. And then if we do start to get to be around $3 a share on Friday, I would then want to be rolling those contracts to upcoming weeks, because I think that we would be seeing a pullback around, so this is around the 4th here going up. April 4th is where the cursor is. So that's next Friday. And so that's above $3, making me sweat having to roll those contracts. But then the following Friday, April 11th over here where the cursor is, I think price would be below $3. So then I would be able to get those shares back and collect all of that premium. And so, that's kind of, how I want to trade this. But then, I would assess, take it 1 week at a time, or really in this case, 2 weeks at a time. But I think that would then be corresponding with a trend of not just one higher low, but 3 higher lows. And then I think that could be positioning us for a potential breakout, which I would then expect to be followed by a retest before continuation. So yeah, I think that there is potential for the bottom to be in now. And so there is a lot of hope. But if we hit 283, I don't think really buying shares are going to be, worth it, at least for me, considering my position size, until we start to get down to around 238. Hopefully that doesn't happen. Hopefully this is what happens. And hopefully this is followed by more moves to the upside and getting back to, hitting this alert here at, 5, which I think will be, some resistance, but hopefully it's shorter term resistance. And, maybe I will just put this up at the end of the video that maybe this is what could be happening. Over here, maybe we have a left shoulder with 5 approximately being the neckline. Maybe over here we have a head, get back to 5, get rejected, but then we put in the right shoulder of an inverse head and shoulders pattern. And from that, we would then be expecting, let's see, a measured move from basically, there, getting that midpoint to around where that neckline would be, around $5. And that would be suggesting that price could be getting towards around 756, 750, filling this gap here at 685. And so, yeah, I kind of like that. I think that's, a nice bigger picture perspective, but then getting up to 5, that would be corresponding with around July 4th, the 4th of July, happy 4th of July, around $5, but then getting rejected there to pull back to around 430, maybe 420 to form that right shoulder, and that valley would be around August 6th. And then getting back up to 5 to retest that neckline. That would be around the end of August before, a potential, breakout. So maybe by the end of the year, we could be sustainably above $7 a share, but we might be seeing some big wicks that are, unsustainable, like this one, some big candles up, to maybe tens, double digits, whatnot. So that's kind of my thesis. If you did enjoy this massive ramble going over the charts and just me sharing my thoughts, make sure you like the video, share your thoughts in the comments down below. If you did get this far into the video, let me know. I would appreciate it. If you're not already subscribed to the channel, make sure you subscribe. And I'll be covering more AMC later. But I hope you guys are having a great weekend. And, I'm going to try to get some more videos out in the meantime. Take care, you guys. Cheers.